Hello, we're back again. And today I want us to spend some time to look at the price history of Bitcoin. I think this is important because it will first give you the history side of Bitcoin, but also the performance of Bitcoin's price. The reason that I want us to have this type of episode is for us in our expectation of whatever crypto token that will develop and also have an increased adoption similar to Bitcoin. What do we expect in the price movement? It will never be the same. Now, take into account that Bitcoin was without mass market adoption. And therefore, now that we've got traditional markets adopting the crypto market, things will accelerate because there is new liquidity in the market. We know that the financial markets, when they see the next shiny object, want to go in very hard. We are sitting at a cusp of an increase in price movement in the crypto market, the likes we've never seen before. That behavior of the traditional market is now coming to crypto. So it's important to cast our eyes to what happened to Bitcoin and understand things will happen differently. Often we think what happened yesterday is what will happen tomorrow. Things will be different. You might miss opportunities for investing for maximum returns on some of the tokens because you are expecting the retracement will be similar to the ones we've seen in Bitcoin. Or you might think that the price point would hold momentum for a long period, and yet the market sentiment now drive liquidity because of the institutional investors in this market. So if we just look at an overview history of Bitcoin, between 2009 and 2010, the technical analysis in Bitcoin was non-existent. This was due to the fact that BTC was not established, and therefore there were no trading patterns of volume that one could look at and use as the baseline for the transaction volume and values. In 2011, the price moved from $1 to $29.60, and then back to $5. The first sign of a parabolic move with significant volume spikes was seen in 2011, and the price action showed early bull and bear cycles. Breakout from resistance levels were frequent, but followed by rapid corrections, indicating the lack of strong support. In 2012, Bitcoin moved from $13 to $12.56. The consolidation phase was less volatile, and the 50-day moving average began to play a role in price stabilization. The halving event was a key support level post the event. In 2013, Bitcoin moved from $13 to over $1,000. The exponential growth with clear trend lines, the fib retracement levels were evident during corrections. The RSI often hit overbought territory without immediate corrections, showing strong bullish momentum. Major resistance levels were seen around $100, $200, and then $1,000, which were broken by then. In 2014, the price movement was from $1,000 back to $378. This was a bearish reversal pattern, like the head and shoulder, and the price consistently failed to breach the previous highs, forming a lower high pattern. If you look at the 50 and 200-day moving average, it crossed bearishly, indicating a downtrend. That was in the market of 2014. If you look at the price around 2015, it was hovering around, there was range-bound trading with resistance and support levels at about $300 and $400. The Bollinger Bands narrowed, suggesting low volatility and potential for breakout. That was 2015. 2016, the price moved from $434 all the way to $968. And here you saw an ascending triangle pattern as the price approached the second halving. Increased volume on breakouts from resistance, and the 200-day moving average provided strong support. 2017, that's the bull of 2017, and here the price movement was from $1,000 to $19,850. So the strong bullish trend with multiple breakouts came out this year. The fib extensions were used to predict targets because you are in the all-time highs movement. Therefore, you use the fib to anticipate where the next price action would be and the potential, the reversals, and to which level those retracements would be at. The RSI stayed in overbought areas for extended periods. People were nervous because of the RSI in overbought, thinking about where the retracement levels would be. The volume spikes were notable at major breakouts. However, the bearish divergence in RSI was observed before the major correction. The price moved from $17,000 all the way back to $3,783. The classical bear market patterns with lower highs and lower lows were experienced. Bearish engulfing patterns and shooting stars were common. Volatility was high with wide Bollinger Bands. The 200-day moving average became significant resistance. The bull market of 2019, the price action was from $3,783 all the way to $7,161. The recovery with a double bottom pattern formed support around $3,000, and the moving average began to flatten or turn bullish. The RSI showed less extreme movement, indicating stabilization of BTC. The bull market of 2020 saw the price action from $7,161 to $29,000. The bullish flat patterns during this consolidation were evident. Volume increased significantly with price surges. The golden cross was seen, which is the 50-day moving average above the 200-day moving average, the bullish signal. The fib retracement levels from the previous peak were key support during pullbacks. The continuation of the bull market in 2020 saw the price action moving from $29 to $64,800 and then back to $46, $6,000. And here the breakout above previous all-time highs with movement confirmations was evident. However, overbought conditions led to corrections. The wedge patterns and bearish divergence in movement indicators like the MACD were visible before significant drops. So that's why these technicals are very important in moments of hype. And then if we go back to the correction of 2022, the price action was from $46,000 all the way back to $16,500. We had the bearish signals with death cross confirmation. The death cross is the 50-day moving average below the 500-day moving average. The price action showed capitulation with lower low wicks on candlestick and significant sell-offs. So support levels from previous years were tested and broken. And then the bear market of 2023. So here we saw the price recovery, but it was around $30,000 all the way down to $500. Bullish reversal patterns like hammer candlesticks at the lows were observed. Moving averages began converging, suggesting a potential trend change. Volume picked up on rallies, providing momentum. Then we went to the bull market of 2024, last year. So here the price movement moved around $30 to $73. This was a strong bullish movement with clear breakouts from consolidation. The cup and handle patterns were evident, and the RSI occasionally hit overbought conditions but pulled back for a shallow, showing strong buying interest. And the introduction of the Bitcoin ETF was a significant catalyst. Now, this bull was really affected by the previous administration of the US administration of Biden. Because here you saw the actions of the Securities and Exchange Commission led by Gary Gensler. You saw Operation Choke Point 2. You saw, and the retracement, we expected and anticipated a longer sustained bull because you had the halving, but now the institutional adoption for the first time with the approval of the exchange-traded funds with BlackRock, Grayscale, and other institutions coming into crypto. Then these were dampened by the Biden administration and Gary Gensler's lack of clarity on the crypto assets the actions that the SEC was taking on crypto assets, the Operation Choke Point 2. So in 2024, withstood a very bad onslaught. And that onslaught in 2023 came through significantly. That administration was devastating to the crypto market. Hence, you saw the corrections we were talking about in 2023 and the limited bull market, a bull that sustained itself because of the technology and the validity of the blockchain as an alternative. The Bitcoin and the cryptocurrencies and the store of value came through. But the meme coins were coming up. We had sustained profits being made by meme coins that we could not understand. And there were a lot of activities taking place in the crypto market. A lot of people lost money. When a market starts to make money, it attracts good and bad players. That's why I always say you have to be very careful and mitigate your risk. Make sure your decisions are psychologically sound. You are not pushed by FOMO. As much as I'm talking about the bull of 2024, there are tiers of the corrections of 2024. So now we are in 2025. We are reaching the highs of $105,000, but we know the all-time high has been at $109,000. We've got a continued bullish trend with new resistance levels being set. The volume analysis shows sustained interest at these levels. However, watch the signs of exhaustion like the overbought RSI and the bearish divergence in MACD with tight precedent corrections. So this is important now that as we are in this consolidation, use these technical tools to analyze the market. But the market is really holding itself, right? You've got exchange-traded funds that are being approved and considered. And we know we've got a securities and exchange that is more supportive of the crypto market. We've got a Trump administration that is very supportive of the crypto market. And therefore, the regulatory changes in the US will favor the crypto market. However, I continue on episodes that I'm doing to talk about the macroeconomics, the geopolitics, because unfortunately in this consolidation, you've got these as the impact in terms of the market sentiments. This technical analysis of Bitcoin gives you the context that involves looking at moving averages, trend lines, volume, the RSI, the MACD, chart patterns, and these help in understanding the volatility of this crypto market, but also understanding the adjustments one has to make with these technical tools. The more we've got institutional adoption coming in, you are going to see these technical tools becoming closer to the normal trading tools because all the impacts affecting other trading assets will now come online. However, the crypto market is highly driven by technology and innovation. So unlike the other trading markets, it doesn't remain the same. The commodities remain the same. The stocks remain the same until there are new players, but it's far and few in between because there's maturity around those. In crypto, we are talking about the AI agents and we're talking about new use cases that are used in DeFi, new solutions, new applications, decentralizations, governance structures, and new upgrades that are taking place in various ecosystems. And therefore, it's a moving target. And hence, in crypto, more than any other trading environment, it's important to keep abreast with developments. So this was the historical analysis of the Bitcoin price action and performance, as well as the technical analysis that are helping you to understand how Bitcoin has been maturing over the course of time. And therefore, when you look at Bitcoin as a premium asset in the crypto market, you've got the foundational performance and movement of the price action on Bitcoin. I hope this was helpful. It gives you the context on understanding Bitcoin and the tools for you to understand the next tokens. I wish you all the best in your trading, profitable trades. Please subscribe We really appreciate the fact that you take the time to view our content, and we would love for you to comment. So subscribe and comment, and we will see you in the next video. I wish you profitable trades. Bye for now.